Okay, good afternoon, everyone. Thank you so much for taking the time, as usual, especially in the middle of a Thursday afternoon. We know how busy everyone is, and we appreciate you taking this 1 hour with us. And the goal every single week is to make sure that this is worthwhile for you and you walk away with a sales idea, a strategy, maybe a new product, right, that will help supplement your income as soon as 4, 5 p.m. this afternoon. So good stuff to come. Please jot down any notes, questions, feedback. We need to hear from you because at the end of the day, we create these weekly trainings for you all, okay, as well as the podcast that we produce once a month. So please chip in. We have that Q&A box, right, that's open typically on the right-hand side of your screen. You might have to expand it if you don't see it, but that is the place where we want to hear from you. Feedback, questions, anything that comes to mind, please type away. Plus, we're giving away at the end of this call, so right before 4 p.m. Eastern Time, the new Amazon Fire 10 tablet plus the Holistic Retirement Approach IUL prospecting book, which goes perfectly with today's call. Okay, so if you answer first incorrectly, we're going to announce your name at the end. As long as you're an active agent with Levinson, you win. Okay, that's simple. So what we're going to do real fast is I'm going to talk about the 100-foot presentation today. I want everyone to understand the reason why we built all this hype around today's call. By the way, we have a record number of attendees on, so thank you to each and every one of you for the third time. And what I want to say is today's feature presentation is with a carrier Sagicor, A-rated Sagicor. And I want everyone to know we have, of course, our core list of carriers that we work with. We have over 90 companies on the life and annuity side. And then we handpick about 10 that are our go-tos. And Sagicor is one of the go-tos. And number one, great company, great customer service. The A-rated by AM Best is also important to us. And I would say number one, the head of distribution, Laura Morrison, okay, is not only an excellent executive with Sagicor in the industry, but also a close friend. She's at every expo, every single year. She's always there if we have a problem case, maybe an underwriting favor, maybe there's an issue at the company. She steps in and makes things right. So that speaks volumes within itself. So again, my hat goes off to Laura. Scott Barnes is our presenter today who works with Laura. In fact, basically Laura's right hand or left hand, whatever you want to call it, but they work together, and kudos to both of you, Scott and Laura. So that's important to know for all the agents out there, because when you run into a jam, they're here to help us every step of the way. And we're also talking about a brand new indexed UL. Okay, and yes, I know, and we know there's lots of great options out there in the market today. Okay, everyone's talking about instant decision and non-med underwriting, yes, which is phenomenal. Okay, but here's what's so cool. So Sagicor has all of that great stuff: non-med underwriting to a million, instant decision, right? If your client's younger and healthier. Now, here's what's unique. The index fund is tied into BlackRock. So this is very, very unique in the space. And again, I don't want to steal Scott's thunder. I'm going to let him talk about the product. We're also talking about the Wealth Care Hybrid Life LTC product as well. And then we're going to jump into, we have 3 different case studies, sales ideas. We're going to talk about the current tax environment, retirement planning, right? And the purpose is, by the time you're done with us today, and by the way, Scott's going to speak on this topic for 30, 40 minutes, but by the time you're done today, you're going to have enough knowledge to go out there, right? If you're working your lead program or your book of business, where you can talk about a new subject, maybe buy sells, which we're also going to touch on, right? That will bring in some of the larger cases, right? Because you're going to know enough to be dangerous. So that's why I keep saying, pay attention, be present, take notes, especially within this next hour. Okay, let's jump right in. So we just announced our 15th annual Agent Expo And we do this every year. Obviously, we took a couple of years off because of COVID, but we are back. 22 was awesome. 23, write this down. April 21st is the day. Okay, just announced at our same South Florida beachfront resort. Okay, and here's what's so cool. It's free for everyone, by the way. And yes, there is a cap of 300 agents, so you must register ASAP. Number two, what we're doing, right, and this is very reasonable, we're starting at $25,000 of paid premium, okay? At 25 grand, and by the way, you can combine life and annuity, so no problem there. 25 grand gives you one free night at our beachfront resorts. 50,000 gives you the one free night plus round trip airfare from anywhere in the US. Another 10 grand at 60 gets you two free nights, so a whole weekend stay on the beach, literally on the sand, okay, and free round trip airfare anywhere in the country. And then again, if you're local or you want to drive in or pay your own way, if you're brand new, you've never written an app before, it's free for you as well. We bring in lunch, snacks throughout the day. We have a light breakfast. We do a dinner the night before for all of our out-of-towners. And again, Sagicor is going to be a part of it every single year they have been on board. So again, thank you to Sagicor. So another great reason to do business with them. I also want to say this particular expo is going to be very unique. We've never done this before. So again, April 21st, 2023, we are having the first ever agent panel. Okay, so we are handpicking agents that will be up on stage with me. I'm going to host it, and we're going to go around the room and ask questions. First, we'll do like a Q&A with each agent, and then each person in the audience, if they have a question for that agent, you can ask it live, okay? And these are successful agents from all different parts of the industry. So it's going to be amazing. We're going to have a little bit of something for everyone. I can promise you that. Okay, if you're working mainly estate planning cases, 10, 50, $100 million IULs, no problem. If you're more focused on final expense, no problem. If term is your thing, again, no problem. We are going to have something for everyone. We're also dedicating a portion of the expo just focused on annuities as well. So it's going to be really cool, very different if you've been before, I can promise you that, and prizes, giveaways that you've never seen before at a Levinson Expo. It's going to be amazing. Let's keep moving along. Okay, this is very, very important to me, and when we talk about American Cancer Society, when we talk about these Hurricane Ian victims, right? When you talk about people starving in this country, it's so important to give back, right? And it doesn't matter if it's monetary, it doesn't matter if it's donating an hour of your time. I feel like you must do something, right? So on behalf of the Levinson employees, on behalf of our agents out there that write business with us, we have made a big contribution to the American Red Cross and 1,000 meals through Feeding America to help all of those affected by this horrible, horrible hurricane that hit a few weeks back. And the middle section, what I wanted to do, October is my month. The reason why I say my month, my birthday, is October 20th, and I decided to dedicate October to Breast Cancer Awareness Month. Okay, we are giving back $10 for every application submitted in the month of October. Okay, it doesn't matter, declined, postponed, approved, doesn't make a difference. $10 for every app submitted. We have thousands of apps at any time, so this is going to be a huge number. We're going to post this on our Facebook page, and again, my heart goes out to all of these people affected. And I also want to say a heartfelt thank you to everyone that's on this call that works with us. Because again, we would never be able to do this stuff if it wasn't for you and our employees, our team, our family. On the right-hand side, this was awesome. This was last Saturday. I participated and sponsored, Levinson and Associates, a rally, okay, a group drive where everyone had to donate supplies that the Pembroke Pines Police Department was taking from the east coast of Florida to the west coast of Florida to help all of these victims from Hurricane Ian that are in need. So we were a big part of this. That was on the 8th, Saturday. And the reason why I wanted to show this, again, because it's about you all working with us and giving back, which is most important. So all of this is on our Facebook page, and I hope you follow it and like it, and you'll be able to stay in the loop with everything that we are doing to help the community. So important stuff here. All right, let's keep moving along. We're doing a cute little selfie challenge. And it's funny, Sagicor's on the phone today. I got this idea from Sagicor when they announced their new product. We're doing a similar thing here. So it's a selfie challenge. Okay, remember that new book I was just telling you about, the holistic retirement approach? Okay, where you can hand this out to a prospect and it explains IUL in layman's terms and tees up an appointment for you. We're giving that for free. Okay, all you have to do, take a selfie showing the mobile app on your phone, the Levinson mobile app. Show it on your phone, post it with that hashtag, Levinson Selfie Challenge. Boom, you get the new IUL prospecting book on us. Okay, as long as you're active with Levinson. By the way, the mobile app, it's a free download, and everything on there allows you to do business with a consumer prospect from A to Z in less than 10 minutes. Okay, the entire process, anything you need to know, it's all on the mobile app. Okay, or obviously tablet or your desktop, but you can get there from any device. Google, doesn't make a difference. Google, Android powered, Apple powered, no problem. Okay, so make sure that's on your phone today. Let's keep moving along. What's new at Levinson? I think the question is probably what isn't new at Levinson, because we are constantly moving the needle and going in the right direction. Okay, we try our best to stay on top of the latest and greatest tools, lead vendors, products, carriers, everything that you need to be successful out there. Okay, and if there's something we miss because we're not perfect, please shoot me an email. Let me know if you see something cool that would help our agents. I want to know about it. I'll do our due diligence. If it's good, we will offer this, of course, to you all. Okay, so let's just, we're going to skip around a little bit because I have, let's see, another slide left, and then I'm going to introduce our feature presenter today, and he's got about 30, 40 minutes, so I don't want to waste time. So let's go real fast, left-hand column. This is what I want to focus on. For all of you that are on this call, okay, and we have a record number, I said that earlier, which is just awesome. If you've never written an app before with Levinson, your first app ever, life or annuity, doesn't matter, we send you the new Apple iWatch, okay? That simple. It doesn't get any easier than that, okay? And of course, we have all the carrier incentives listed on the left side, which, by the way, since we're literally wrapping up the year, we're pretty close, right? In mid-October, almost every carrier has great incentives now. So we have an incentives folder on our website. I encourage you to take a look at, because there's literally thousands and thousands of dollars there for you on top of your commissions and renewals that all come direct pass through. Okay, we're not one of these 17-layer pyramids. As you know, everything's direct, full pass through, plus you get to take advantage of all these great incentives. Middle section here, I'm going to skip around a little bit. So Insure Me Now Direct is bigger and better than ever. We have now almost 20 products. We just added 2 new Gerber Life products. We added a new Surebridge product. We have the new Guaranteed Issue Hospital-Wise product on there. We have new Lloyd's of London DI products that are being programmed as we speak. I'm telling you, that platform is amazing. And when you think Insure Me Now Direct, it's not just about sending people to your site and hopefully they buy. Even if you meet someone face to face at the mall or your daughter's soccer game, whatever it is, right? You can run a quote, turn your phone around, they can apply and get approved in minutes. So it doesn't matter. Or if you want to email someone the link, hey, Bobby, check this out when you get a chance, and you can run quotes instantly. And they purchase, sign up online, done. You wake up, there's a commission in your inbox and with a case approval notice. I mean, it's unbelievable. And we're the only ones that have a multi-carrier, multi-product platform, okay, built for you, the agent. We don't go retail, okay? We're all wholesale, built for you where you still are agent of record, full commissions, full renewals, okay? So there's nothing else like that. If you know any agents, you want to put them in your hierarchy, now's the time. I would run with that platform, especially if you want to network with P&C agencies, health agencies, mortgage companies, real estate companies, okay? No brainer. We can customize the Insure Me Now Direct platform just for ABC Mortgage Company, okay? To make it look like it came from them, but you're getting all the credit and commissions. So, I mean, there's endless options. We can help you with this. In fact, Annalise is the go-to when it comes to Insure Me Now Direct, so feel free to reach out. Okay, right-hand side, the Levinson Expo just announced, and I'm so excited about that. And just under that, I'm very, very excited about this. We have the first ever live living benefit certification course in South Florida. Okay, we did one virtual about 3 weeks ago. It was a huge hit. We had thousands of agents on this one. We're doing live, first time ever with LSW in South Florida. Going to be amazing. Check out the thank you email, which you'll have in your inbox tonight, and it will include all of this information. Sage Scholarship Program, which, by the way, Sagicor participates in, which means any Sagicor product you sell, you give your consumer prospect insured 1 year free scholarship. Okay, doesn't cost you a thing, doesn't cost the client a penny, just a value add. Today there is 444 colleges that are in the program. Okay, all over the country, by the way. So there's no reason to not use the Sage program. Again, free. There's no commission reduction. We pay the monthly fee. So leverage these opportunities. This is pretty cool. The last thing I'm going to talk about before we move on, bottom right corner. So what we did is, as you know, we have 3 departments here at Levinson. Okay, marketing, new business, contracting. Okay, what we did, we took the top agent questions and we answered them. So kind of like an FAQ. Okay, so there's 3 versions for each department, and it's a live recording that we did here at the Levinson home office. And now we just launched, in fact, it's going out today, the Spanish version. So if you have any agents that only speak Spanish or bilingual, I would use both versions, send them out, and it just gives you that warm and fuzzy, especially if you're new with Levinson. It kind of walks you around each corner of the Levinson home office so you're comfortable in working with us. So take advantage of that. We'll also include it in the thank you email that goes out this afternoon. Okay, this is my last slide, and then Scott's going to take the wheel. Now, there's a reason why we have every single IUL carrier that Levinson offers on the slide in front of you, okay? There's also a reason why, top left corner with that yellow arrow, we're showing Sagicor Life, okay? Number 1, the red asterisk, what does that mean? Comes free with the Sage Scholarship Program. Every single person you sign up, they also get a free account with Sage, 1 year scholarship. Even if you've written Sagicor policies in the past, okay, they used to have term, IUL, whatever it is, they also qualify for the free scholarship. So you can go back to those people and say, Harry, great news. Because I'm a Sage Levinson agent, I can enroll you in the scholarship program, and little Susie gets 1 year free at Embry-Riddle in Florida. Embry-Riddle, the aeronautics college, okay? Well, that's one of the 444. The list goes on, but that's a great value add, a great differentiator that separates you from the million other agents in this country that are going after the same bucket of consumers. You got to think like this. What is your differentiator, right? Okay, also, you're going to see our other core companies, right, for IUL. Yes, we have a bunch of great carriers, but the story you're going to hear today from Scott makes that yellow arrow, okay, top left corner, very different, very unique. This is their differentiator, the story you're about to hear in a few minutes. Okay, our last slide here is an introduction slide to Mr. Scott Barnes, who is our Sagicor internal wholesaler. Got some great stuff to go over, so make sure you're paying attention. Write down plenty of notes. Scotty, we appreciate you taking your time, buddy.
Thank you very much, Bill. Really appreciate it. And just wait for the ability to share the screen.
Yep, we are switching over right now.
Excellent. Thank you, sir.
Okay, there we are. Okay, you should be good.
Excellent. Well, thank you very much, Phil. Thank you to everybody at the Levinson team for allowing me to speak today, and really want to thank the Levinson team for everything they do for Sagicor. I know my boss has, as Bill said, Laura Morrison is disappointed she couldn't join today. She actually had a conflict and wasn't able to be a part of this. But I'm really excited to share with you today really what we have going on with these new iShares from BlackRock, and want to talk to you about some ideas and challenges that your clients face and how you can help them overcome them to meet their long-term goals. Really, as you know, this is something that's very, very important. And it's a significant concern for affluent individuals, clients who are upwardly mobile, business owners, and those who receive an inheritance. And that really is tax risk. Tax laws are constantly changing, and there's no way to predict how taxes will impact these clients 20 to 30 years from now, and when they retire. That's why it's smart to diversify their retirement portfolio with assets that provide tax-deferred growth and tax-advantaged income distributions. Some little disclosure information, and really what I believe that many of us will agree that it's likely that taxes are going to increase. And here are some of the changes on the table that could become part of the tax code within the next few years. There's been talk of an increase in the highest personal income tax rate back to the 39.6 from its current rate of 37%, a cap on itemized deductions for affluent taxpayers, limitations on like-kind exchanges by real estate investors, a phase out of the 20% deduction for qualified business income for top income earners, the eradication of the step-up in basis for inherited capital assets, resulting in more taxes on wealth transferred to heirs, the end of favorable rates on capital gains for anyone earning more than $1 million, and a change to the estate tax exemption. So let's look real quick at the history of the long-term capital gains tax, which is applied to investments held for more than 1 year. Over the past 108 years, the top rate has been as high as 77%, and it's continued a path of dropping and rising over the years. Luckily, it's definitely much better than it was when it was at 77%. But some of what influenced the rise and fall of this rate includes the stock market crash, the Depression, war, high interest rates, and recession. Currently, the top rate is 20% plus a 3.8% net investment income tax for individuals with modified adjusted gross income exceeding IRS thresholds. It's expected that the long-term capital gains rate will likely rise for high-income earners and small businesses. Not only will this tax increase affect the affluent, but it's going to impact everyday Americans, like working parents who may start a side business to help send their kids through college, or the painter down the street who renovated a real estate investment to make a better life for him and his family. When it comes to income taxes, this is the top marginal tax rate changed from 1913 to 2021. Let's review some of the highlights of the changes that occurred over the years. In 1918, it jumped to 77% to finance World War I, and even though the rate fell to 24% when the market crashed, it rose to 63% during the Great Depression and continued to increase as we entered World War II. From the 50s to 70s, the top maximum rate never fell below 70%. There was a tax cut in 1981, but in 1984, tax loopholes for business owners closed, killing 50% of the original tax cut. In the late 80s, the top tax rate dropped to 28%. Then it began increasing until it topped out at 39.6% from 1993 through 2000. The top marginal rate decreased to 35% from 2003 through 2010, then subsequently increased to 39.6 plus before settling in at the 37% plus in 2018. The current administration is expected to propose bumping up that top tax rate back to 39.6% plus. Now let's look at estate taxes. As you can see, the top estate tax rates and exemptions for individuals has changed over time. One of the highlights was in 2010 when the government did not levy any estate taxes. In the latter part of the decade, the estate tax exemption increased to a little over 11 million, which was much higher than ever before. so only the very affluent needed to be concerned about the 40% estate tax. Unfortunately, the exemption is scheduled to sunset on December 31st, 2025, when it reduces to $5.49 million. These adjustments will create estate risk for more Americans, even those Americans that might have a vacation home that's been passed down in the family. Another change was the implementation of the Secure Act. It's resulted in the most sweeping retirement legislation passed in the last 13 years, and it was signed into law on December 20th, 2019. One big change brought about by the Secure Act will lead to tax exposure for your clients who may be inheriting their parents' IRA and qualified plan assets. Before this law, non-spouse beneficiaries of retirement plan assets could stretch their distributions over a lifetime. Now, retirement accounts of parents who died after 2019 must be distributed over a period of no longer than 10 years after the death of that owner. And that's for non-spouse beneficiaries. Depending on the beneficiary's income and the size of the inheritance, withdrawing assets within a 10-year period could lead to a reduced legacy and new tax risk for the beneficiary by increasing their income tax and capital gains exposure, potentially moving them into a higher tax bracket, and raising their modified adjusted gross income. So one of the most important ways to help protect growing assets, income, and wealth that will pass along to the next generation is to diversify the portfolio with investments that offer clients tax advantages. When it comes to tax diversification, what's in your client's retirement portfolio? First, you're probably going to see the investments that are in the taxable now bucket. Those are ones that are subject to income or capital gains taxes. These recurring taxes can slow growth compared to tax-deferred investments that grow and are taxed later. Investments in the tax-deferred bucket become taxable when income distributions or withdrawals are taken. These withdrawals can have an impact on your client's tax brackets and modified adjusted gross income. And finally, investments in the tax-free bucket are income tax-free. Withdrawals taken from these assets won't affect your client's tax bracket, their modified adjusted gross income, taxes on Social Security benefits, or increase their Medicare premiums. So let's take a look at some of the solutions that can be utilized to place more money into that tax-free bucket. What separates an indexed universal life insurance policy from other permanent life insurance policies is that it offers flexible premium options. For example, one year your client may pay the illustrated premiums, and the following year they may reduce or opt to pay more in premiums. IUL policies include an insurance component and an accumulation component, since the cash value grows based on the performance of an equity index. Your clients experience some of the upside potential of the index performance, limited by either a capped rate of interest or by a participation rate. These policies also feature a floor which protects your clients from market losses. These policies can be ideal for clients who want growth opportunities, flexibility, tax-free gains, and the ability to build a future cash reserve that they can access through income tax-free loans and withdrawals. Keep in mind that the opportunity to access tax-free money through loans and withdrawals requires that the contract stay enforced and that it is designed as a non-MEC, a non-modified endowment contract. By adding Sage IUL to your client's portfolio, you can help them protect growing assets now, enjoy a tax-advantaged source of income in the future, and potentially pass on income tax-free death benefit to their beneficiaries. Best of all, your clients are always in control. They can contribute more to the policy when they have extra money to help increase their cash value accumulation potential, of course, up to the MEC limits, or possibly skip a premium. The interest crediting they earn is not taxed, and they can take income tax-free loans and withdrawals whenever they want. So let's take a look at Dan. He may remind you of some of the clients that you possibly have. Dan is an orthodontist and just recently became a new father at age 35. His financial needs include securing additional financial protection for his growing family. Since he's making maximum contributions to his employer's 401k plan, he needs additional tax-efficient ways to increase his retirement savings. Unfortunately, based on his income, he's unable to contribute to a Roth IRA, so this makes a lot of sense for him. As he climbs the ladder of success, Dan will also need a tax-efficient source of retirement income when he retires. If he decides to retire early, it would be ideal to be able to avoid the 10% IRS penalty for taking distributions before age 59 and a half. After meeting with his financial professional, Dan purchases a Sage IUL policy with an initial death benefit of $460,323. In this scenario, he pays an annual premium of $21,000 from age 26 to age 60, based on a 6.71% illustrated rate of return using the Ishares ESG Aware option. He will have a projected income of $108,892 a year from age 61 to 85. That's over $2.7 million of tax-free money that's been taken out via withdrawals and loans. And that's on a total premium being paid of $525,000. If he were to pass away at age 60, his family is projected to receive almost $1.8 million in income tax-free death benefit. And if he happens to become chronically or terminally ill, he has the ability to accelerate some of the death benefit to assist with expenses. So let's take a look real quick at how Sage IUL stacks up against the competition. This is one of the things that when we rolled this out, we've gotten a lot of questions, and I think you'll be pleasantly surprised by how we look when you compare us to others. When you run comparison IUL illustrations, know that all IULs are not created equal. Some IUL products have non-guaranteed features that may look good in an illustration, but may not produce the outcome you hoped your client would experience. In this scenario, we have a 45-year-old male, preferred non-tobacco, putting in $10,000 a year for just 10 years. We are solving for the minimum death benefit so we can maximize the cash value. We then show 20 years of distributions from age 66 to 85. You can see that we are at the top of this group that I'm showing you here for income purposes when illustrating at the maximum illustrated rates. But let's take a look at a less than ideal index performance. Again, everybody at their maximum rates is probably going to look very, very appealing. But let's take a look if we drop that to a more possibly conservative rate of return. Sagicor looks good when you run us showing the best rate case for index returns, and we still look strong when you stress test us at a lower level. In this case, what we're looking at here is a 5% rate of return. When you review some of the companies not shown here that happen to illustrate very well at maximum rates, stress test them at 5. Let's see how they hold up. You'll see that many of the top performers at the maximum level will fall apart when stress tested. And I can't really emphasize this enough. All these illustrations for most companies are really built on the idea of really showing strong numbers when they're illustrated at their max rates. In this situation, run a comparison just to see how their solution looks when you do show a lower rate of return. Does it perform the way they expect it to? Does it look as good? Especially those companies that have a lot of multipliers or bonuses that are involved in their solution, because those will end up usually looking very poor over the long run when you look at a lower rate of return. There are many things that set us apart from other IUL policies, including our partnership with the BlackRock Ishares. Our accelerating process can be ideal for today's clients who like a faster, easier, lab-free way to purchase life insurance. Product simplicity. I can't emphasize this enough either. Unlike a lot of carriers with complex designs that include those multipliers and non-guaranteed features that are difficult to understand, Sage IUL is a policy that's easier to understand and explain to your clients. I sort of consider our solution a no apologies product. You'll be able to sell it to them. You'll be able to explain how it works, how it operates. And when they come back to you, you're not going to have to apologize for how the solution is performing, because there's no complication in the way that it's set up with some of these other companies, again, that have the multipliers and bonuses that are not exactly clear and easy to understand from that perspective. We do also include a built-in chronic illness protection for no additional costs or underwriting. And there are no fees to impede growth, and we include a persistency bonus that rewards longevity. So let's take a look at Sagicor's accelerating program. Bill alluded to it, and it's an ideal way to meet changing client preferences when it comes to buying life insurance. With accelerating, there's no need to have in-person client meetings if you don't want to. It features e-application and policy e-delivery. The e-app can be completed over the telephone with e-signature. You can also do e-app side by side with the client in the room. So there is definitely an easier way to submit that case rather than using a paper application. It's a completely fluid-free, non-intrusive process with no paramed. Unlike other carriers, we work hard to avoid blood and urine from rated underwriting classes up to preferred plus. Even if your client is in a standard underwriting class, instead of pivoting immediately to full underwriting, Sagicor will try to process the application with just an APS, keeping the process less intrusive for your client. There are no telephone interviews with Sagicor for your client, and this enables you to maintain control of your client relationships without having to hand the process over to a tele interview. With Sagicor, you have the opportunity to receive an underwriting decision within just a few minutes at point of sale, and that goes from either rated all the way up to preferred plus, and including tobacco. So even if it's a standard tobacco, there's still a possibility that they could get an underwriting decision at point of sale. Our competition can take days to do the same. And since Sagicor IUL is focused on accumulation, many of the clients will qualify for that accelerating process, since the goal will be to minimize the death benefit to maximize accumulation. So if the death benefit exceeds our accelerating limits, though, we will pivot to full underwriting. So that's not a problem. But in the majority of the situations that you'll be running when you're trying to build a supplemental retirement income stream, the most of those cases will fall within our accelerating limits, since we're trying to minimize that death benefit. So these limits that you see on the screen at $1 million up to age 50 and $500,000 up to age 65, the majority of those cases will fall within there. And again, if for some reason it doesn't, we will go ahead and go into full underwriting, and we'll still work to pull APSs before we order labs. That's always our last resort. We don't want to have to order them, especially if your client has gone to the doctor just recently and had lab work done. Many times we'll be able to use that information that was obtained through that to make an underwriting assessment, even if we do have to go over our accelerating limits. Sage IUL offers client growth opportunities, including interest crediting strategies linked to iShares ETFs from BlackRock. Again, as Bill said, this is something that's huge for us. We've partnered with BlackRock, and we're one of the only companies out there that's available that is actually offering BlackRock ETFs as part of their index options that are out there. BlackRock is available in some other different solutions, but those are usually in what they call volatility control indexes. These are ones that we're the only ones that are utilizing the ETF strategies that we have available here. Of course, we do have the S&P 500 index as an option, and we offer for our Sage IUL both a cap and a par strategy. The iShares Msci EAFE ETF, lots of letter jumble there, is focused on mid and large cap companies in the mature economies of Europe, Australia, Asia, and the Far East. And just so you're familiar with MSCI, I'm sure you've heard of it. It's Morgan Stanley Capital International. That's what these ETFs are based on. MSCI put together these indexes, and BlackRock basically mirrored them in the form of an ETF in order to create these indexes for us. The iShares MSCI Emerging Markets ETF is focused on mid and large cap companies in emerging markets. Those are the ones that are like, say, in Korea, China, India, and South America. And finally, the iShares MSCI ESG Aware ETF option is focused on U.S. companies that MSCI has identified for their positive environmental, social, and governance characteristics. I'll throw this out there. You've probably heard recently there's been a lot of noise around ESG type of solutions, especially Governor DeSantis has mentioned it, Governor Abbott has mentioned it. The way I always look at these things, these are ones, again, that were identified by MSCI as having these characteristics. There's nothing inherently wrong with them. Pretty much every single one of the companies that is listed in that ESG Aware is part of the S&P 500. It's just MSCI has chosen those companies based on those different solutions there, or different characteristics there. I look at it as if the solution is able to perform, you should take a look at it. That's all that matters. I mean, as far as I'm concerned, doesn't bother me that there's something that is out there that has these characteristics, but there is a lot of noise out there these days. So I just want to make you aware. You don't have to use that option, obviously, but it does perform very well, and that's something that you should take a look at, because performance is a big driver in making these types of policies work. All of the ETF, the iShares ETF options are participation rate strategies. So there's no cap on the upside potential and for the S&P 500, we offer both a cap strategy and a par strategy. Depending on your client's risk tolerance and objectives, these index options offer a diverse array of opportunity for cash accumulation. Now let's move on to another case study. Jessica and Tiffany were college roommates, and they always wanted to open a veterinary practice together. They now own a successful animal clinic, and after speaking with their financial professional, they agreed to put a buy-sell agreement in place. This will ensure that if one of them should die or leave the business, it can carry on without interruption. It can also ensure that when Jessica or Tiffany retire, they have an asset that that can provide sufficient income for their future. The buy-sell will be funded with a $1 million Sage Iul policy purchased on each client. They both allocate 100% into the iShares ESG Aware, and each policy will be funded with a level annual premium of $15,000 to age 65. If Jessica and Tiffany were to die prematurely, the business will be able to buy out the decedent's ownership share from the surviving spouse or their heirs. This will eliminate their respective spouse or heirs from becoming an owner in the business, thus allowing ownership continuity. As part of buy-sells, that's probably the biggest reason that they're put in place. There's really put in place for two main reasons. One is to make sure that there's a market for their ownership share, and in order to allow the remaining partners or partner to be able to take over the business without their decedent partner's family becoming involved, because many times they don't want the other family members to get involved. If the husband was not involved in this situation in the veterinary practice, the remaining partner does not want to have to work with that husband as far as them becoming an owner of the practice. So it makes sense to put these buy-sell agreements in place, really for the purposes of creating a market for the actual business, and also to make sure that the continuity of the business is able to continue for the remaining partners that are left. If neither passes away, the business may transfer each policy to the insured in the future, giving Jessica or Tiffany a potential source of supplemental retirement income and income tax-free death benefits to their heirs. As we discussed earlier, the Secure Act has the potential to create new tax risk for adults who inherit their parents' qualified plan and IRA assets. This is because the Secure Act has taken away the ability to stretch distributions over a lifetime. Even though certain beneficiaries still get to stretch over a lifetime, most adult non-spouse beneficiaries are limited to 10-year liquidation. The Securence Care Act is an acronym for Setting Every Community Up for Retirement Enhancement. This piece of legislation was a bipartisan effort intended to help more Americans save for retirement so that they don't have to rely on this country's overburdened Medicaid and Social Security programs. Some of the beneficial aspects for retirement savers are giving part-time employees opportunities to participate in a company-sponsored plan, retirement plan portability, extending the age beyond 70 and a half to be able to make contributions to IRAs, and increasing the RMD age to 72. However, when it comes to passing on IRA and qualified plan assets to those non-spouse beneficiaries, the law has some unfavorable tax implications. This change can lead to tax exposure for your clients who may be inheriting IRAs and qualified plan assets from those non-spouses. Let's look at life before and after the Secure Act. Before the law, non-spouse beneficiaries and retirement plan assets could stretch their distributions over their lifetime. As you would imagine, if a parent has substantial savings, their adult children used to be able to minimize their tax exposure using this technique because it's based on their personal life expectancy. So they might be able to stretch it out over 20, 30, 40 years, depending on their age when they receive those assets. Under the Secure Act, inherited retirement plan assets must now be liquidated by the end of the 10th year after the death of the original owner. One approach an IRA owner can use is to distribute a portion of the IRA to purchase a life insurance policy that can provide a more tax-efficient legacy for their heirs. The income tax-free policy proceeds could also be used by the beneficiary to pay any taxes on other inherited assets. Keep in mind that liquidating those IRA assets does have current tax consequences to the IRA owner. As we know, many seniors who own IRAs are likely to be in a lower tax bracket than their adult children, and they may be in similar circumstance to our next case study of Betty and her son Keith. Betty decides to distribute a portion of her $500,000 IRA to purchase a WealthCare Index Single Premium Universal Life Insurance policy. Betty takes a $133,333 distribution after taxes that nets her $100,000 from the IRA and purchases the policy. She allocates 100% into the Ishares ESG Aware. If Betty passes away with WealthCare death benefit, the WealthCare death benefit will transfer to Keith federal income tax free. And if Betty would ever need care, she could take the chronic illness cash payment as a monthly benefit or as a lump sum. Of course, she also has the ability to get her premium back at any time she decides that she no longer wishes to continue the policy. You'll see the two columns above, one that is guaranteed and one based on current assumptions. She will always be able to receive the guaranteed column, no matter how the index options perform. If the index options perform well, she would see an increase in her death benefit, cash surrender value, and chronic illness benefits. The new iShares options provide additional index crediting opportunity that increases the client's opportunity for growth. There are two underwriting classes for WealthCare, preferred and standard. Preferred is table 4 or better, and standard is table 5 and 6. The chronic illness benefit is included on the preferred class only. So if they were to be a standard underwriting class, the chronic illness benefit is not included. But again, that's for a table 5 and 6 risk. Even though this is an IUL policy, it does have a guaranteed death benefit, a guaranteed return of premium, and chronic illness benefit. The chronic illness benefit does not require any additional underwriting, a cognitive exam, or telephone interview. The amount of the chronic illness benefit available is the lesser of $500,000 or the death benefit minus $25,000. So for example, if the death benefit's $250,000, the amount available for chronic illness would be $250 minus 25, which would be $225,000. You divide that by 48 months, and that's her monthly chronic illness benefit. The $25,000 that was subtracted out originally is a residual death benefit that'll be paid even if all the chronic illness benefits have been paid out. So you can look at it as a final expense policy if she were to have all of the chronic illness benefits paid out. Your access to the rider is based on having 2 of 6 ADLs that you're unable to perform or severe cognitive impairment for a period of at least 90 days. The claims process with us is probably one of the best things about it. It's very easy, and it's just 2 pages. One side is completed by the client. The other side is completed by the client's physician. It is an indemnity benefit, meaning that the benefit can be used for anything that the client likes, and there are no receipts required. With WealthCare, we actually have a few additional index options available over our Sage IUL. We've added a high par strategy for our MSCI EAFE ETF and a high cap and high par option for the S&P 500. These high cap, high par options do charge a 1% annual asset fee, but they do offer greater opportunity to participate in index gains with these ETFs. Just remember that the policy still has a minimum guaranteed death benefit. So even if that 1% fee were to be a drag on the performance, the policy is never at any risk of lapsing or not being able to return the initial premium. Typically, when we're looking at these solutions, if I have a tendency to say, look at one of the high par or high cap options, because there's really no downside for the client in that regard. Because it has a guaranteed death benefit, guaranteed return of premium, and those guaranteed chronic illness benefits, take the risk, take the 1% fee, because you do have substantially larger possibilities for gains in the future. So it can make a lot of sense to really take advantage of this and use those options. Again, if you don't want to have that complication, feel free, just choose one of the non-high cap or high par options, and you're still going to get very reasonable returns. It's just you do get the better upside potential with the high cap and high par options with really no risk, since there are the guarantees associated with it. So I want to thank everybody today in the Levinson team for having me on. Take a look at the clients in your practice and consider who may benefit from our IUL solutions. Some of those would be clients who are concerned about rising taxes. They may be 30, 40 something, upwardly mobile and raising families with changing needs. those who are maxing out their 401k and IRA contributions and need opportunities to accumulate more for retirement, or they could face an income shortfall. The emerging affluent who will move into higher tax brackets, successful business owners, and of course, for wealth care, clients that have money sitting at banks in CDs or money markets earning minimal interest. So I guess I'll turn it back over to you, Bill. I really do appreciate it. I'll go ahead and stop sharing my screen right now and give it back to you. But thank you for the opportunity to speak to everybody today. If you have questions, obviously reach out to your Levinson team, and they'll be more than happy to assist you. Bill?
Awesome. Yep. Great work, Scott. As always, we got a bunch of questions that came in. So what we're going to do is we'll answer everyone as soon as we wrap up this call. We'll also reach out to you if needed or call us and we can circle Scott back in. So don't worry about that. Just the number of attendees, we couldn't open this up this week. So my apologies for that. Okay, so we got a few more minutes left and then we'll have our question of the day. So real fast, if we jump into the first slide here, how to get started. And what I want to just add quickly is if you're an existing Sagicor agent with us, wonderful. Okay, if you're with another IMO, but you want to take advantage of the scholarship program and all of the other tools we offer, the leads, great. Okay, we transfer your contract, we match or most of the time beat your commissions plus free leads or cash for contracting. So that all of this will be included in the thank you email, but it's also on our website. If you look at the first yellow arrow, my contracting, and then the second one, that is where you'll fill out the coupon, and then we will send you cash or leads with your first paid application. That's simple. Right-hand side, we have a microsite available on our website. So it's called Iul Experience. If we can mute those lines, that would be great. Okay. It's called iulexperience.com, and everything related to IUL sales, including consumer approved material, everything that you need as an agent, videos. We have social media videos you can use to generate leads. Everything is there updated in real-time fashion, so please check that out, and we'll include the link, like I said earlier, in that thank you email. By the way, if you don't receive our email tonight in your inbox, check your spam folder. If it's not there, just call us. That means we have your incorrect email address. Okay, the next slide here is a cheat sheet that we put together and, in fact, just updated it this week. This is all of our carriers' non-med products. What's the minimum, maximum issue age and face amount? So basically, this was built for you that are selling over the phone or for you all that are selling virtual. It doesn't matter. You need to know where to go for that specific client in seconds. So this is a cheat sheet that was built for you. We'll include this as well. Let's keep moving along. Next is the hottest topic that every single agent has questions about, and it's leads. Okay, no secret. So what we have in front of you are 4 options. Okay, obviously, if you work seminars or webinars, wonderful. Use some of our platforms, okay, to gain traction, to build the audience, especially like that $500 gift card for Sage you can give out to everyone that listens to you speak about life insurance with college planning. They don't even have to buy a policy from you, and they get a $500 gift card just for coming to your seminar or webinar or one-on-one meeting, okay? Top left corner, Ringy, that's a no-brainer. That's just basically a bucket where you're going to put all of your leads, consumers, prospects, existing clients, everyone, and you're going to drip out to them and keep your name in front of them every week by email, text, phone call, everything. You name it, you're going to hit them by every single angle, and maybe you can do, IUL March, and maybe it's a estate planning or business insurance April. You build the campaigns, and the bottom line is when these consumers are thinking about life insurance, long-term care, DI, whatever it is, they remember, hey, it's Bill Levinson, the local guru. I'm going to reach out to him, and I'm going to text him right back. Okay, and the return rate, just so you know, facts, is about 20 to 30% now. So about 20 to 30% of the prospects you put into Ringy are going to reply back to you in one way or another. okay, on whatever device they would like to communicate with you on. So it's a no-brainer. It works. Bottom left corner. Now, I'm telling you right now, I have never in my 23 years of doing this seen a lead program like these $1 million life leads. Okay. In fact, just this morning, we have an MDRT agent, David, who's I think on with us right now. I'll check in a minute. He sent me an email, first time ordering the batch. He said the lead program is great. He wrote 2 applications already and working on 2 more. And these are big cases. These aren't a typical final expense lead or $50,000 10-year term lead. Okay, these are IUL cases, whole life cases. They're monster term cases. It's up to you how you pivot, but I'm telling you, well worth a shot. That is our $1 million no exam life leads. They work great. Top right corner, that is our IUL prospecting book series. We have a brand new one called Holistic Retirement Approach, and you will get a free copy with that Selfie incentive I spoke about earlier, and then the other 2 versions are available. These are great for handouts, especially during the holidays, right? To give these out and attach your business card and say, hey, Stephen, do me a favor, read this IUL book and give me a call when you're finished and let me know your thoughts. And it explains IUL in layman's terms to a T and sets up the appointment for you. Works great. Bottom right corner is our mailer programs. We now have one for annuities, financial services. We have mortgage protection. We have the second chance leads that are $2 a lead. These are great to call and email and put into your Ringy account and let Ringy do the work for you. All of this stuff is available to you at co-op discounted rates. Take advantage of that. Okay, next up is our podcast slide. These are great. You know, how many calls do we get from agents saying, Bill, I want to speak to your top agent. I want to pick his or her brain for an hour. Okay, I can't give out their phone number. Obviously, that's a violation. I wouldn't do that to you. I can't do that to them. So what we did is I handpicked these guest speakers and I interview them for an hour and I pretend I'm you and I just dig in and ask questions about what does their marketing plan look like? How do they get leads? Do they like seminars, webinars? Do they like social media and Facebook ads? All the above. So on the left side, that was episode 40 with Natalie, who is a senior market agent, has a great model, does very well on the life and annuity side. On the right side, I literally handpicked our $1 million life leads vendor, the owner of the company. His name's Andrew. I sat down with him for 45 minutes, picked his brain about the lead program. So that's another good one. We'll include both in that thank you email that's going out this afternoon. Now, next slide is our future trainings. And by the way, we are done in just a minute. Next slide, real fast. Okay, future trainings. This is a big one because right now, the annuity market is blowing up. We are up literally 3 times the annuity premium by 3. Think about this for a second. You know what's going on in the market. Everyone is thinking about a safety net, about an alternative, right? Rates are skyrocketing. Commissions are through the roof. If you've never written an annuity before, if you're a veteran and you're an annuity pro, you got to be on this call because we brought in a top consultant who's not tied to any carrier. Chris is joining us. He is the resident annuity pro. He's going to talk about all carrier sales ideas. And again, if you've never written an annuity, you'll be comfortable after that call. Or if you're a pro, you're going to find out some latest and greatest product strategies. I can promise you that. Bottom section, Ringy CRM training. This is going to be huge. We're doing a 2-part CRM Ringy training. We're giving away over $4,000 of incentives on both calls. And the main point is I want you to get comfortable with this platform and take advantage of our co-op discount pricing. And even if you're not going to use Ringy and you have your own tool, that's great. Just go on and use it for ideas and strategies. It doesn't matter. As long as you're writing business, that's all we care about, right? At the end of the day, if you're helping families, making money, wonderful. Let's move on to the last slide and our question of the day. I hope you were paying attention, and I hope your little fingers are on your keyboard ready to answer first. Okay, but what I'm going to do before I ask the question is, like I always do every week, our Positive Tuesday quotes. You don't have to rely on luck or shortcuts when you're prepared, focused, and ready to execute, right? So do the hard work. Do whatever it takes. Don't be lazy, okay? We know shortcuts lead to a place of nowhere. It's not a good place to be, okay? Put your right foot forward, right? Learn, strategize, do whatever it takes to keep moving forward. That's the secret sauce, right? Do whatever it takes. With that said, our question of the day is, how many colleges are now in our SAGE scholarship program? How many colleges are now part of our SAGE scholarship program, which is free for you as the agent and the insured? It's a no-brainer, win-win-win. Even if they say, oh, Bill, my daughter, she's going to Florida State University. She's not going to any one of your colleges in SAGE. Okay, great. We can give it to her cousin, okay, or her stepbrother, okay? Any family member or blood relative, we can transfer the program to. So anyway, and by the way, Lynn University was also just part of SAGE. They were just announced, and they're in South Florida. How many colleges are in the program? You tell me, you win. Annalise, who is our winner of the day?
All right, Bill. So for today, the winner is Wanda W.
Wanda W. Congratulations. The answer was 444. 444 colleges in the program. Make sure you're active with Levinson, with Sagicor, with Sage. Leverage what we're offering, and it's all free to you. We're not charging you. It's not a membership fee, okay? Take advantage. Let's have a great Thursday, a great rest of the week, good selling, and thank you again for taking the time.